Gainers at this point in the markets. The Dow is off by 329 points, pretty much hovering near the lows of the session. The session, of course, only about 15 minutes old. Now, the markets, as you can see right there, all across the world are reeling from the Fed's stark warning about the U.S. economy. For more, we're joined by the former Fed Vice Chairman, Alan Blinder. Alan, great to have you here in the studio.
Yes, good to be here. Thanks.
Now, we also had John Writing here about an hour ago, and basically what he said, his take, and he's been critical of the Fed and of their stimulus policies. He has said that this outlook by the Fed is scaring investors. That essentially they should not have done this. What do you make of that?
No, I disagree. I mean, really, did the Fed tell investors anything they didn't know? No. Everybody knows the economy is looking weak. The popular estimates is a 1 in 3 chance of recession. Some people are saying more than that. The fact that the Fed characterized the economy as weak is supposed to be news? I don't get it.
But then you've got this sell-off going on today in the markets. What do you think is going on then?
Well, I don't know what's going on. You know, understanding what the markets do on a day-to-day basis is a loser's game. And I don't pretend that I can do it. And, well, yeah, unless you're quick. You know, the first one to hit the button
right.
wins, the rest lose. The market's been gyrating, as you know, much more these days on the news from Europe,
right.
which is one day is good, the next day is bad, and so on. I mean, if in fact this is a reaction to the Fed, which seems dubious to me, it'll just pass.
Okay. Well, you agree with what the Fed did. You agree with what Bernanke did.
Yeah, I do. I don't expect any miracles from it, and frankly, neither do they. This is weak weaponry, and that's all the Fed's got left. So, I mean, Bernanke's got two choices, basically. He could do what the 3 dissenters want him to do, which is just say, I give up, I've done all I can, and there's nothing else for me to do. Or he could start throwing sticks and stones and pea shooters and BB guns and whatever he's got at the weak economy in the effort to make marginal improvements, and that's what this is.
But the way you say that, Alan, makes me think, well, why should they go on? Why should they, why should they do a bunch of weak things for the markets or for the economy when perhaps they should actually stand more pat and strong and say we're not going to do anything?
Well, I'll tell you why. Because at this stage, with a 9.1% unemployment rate, if I take the estimate that I just saw from macro advisors, it's just one estimate, suppose you could create another 400,000 jobs. Why not do it? And that was their estimate of what this is worth.
But this is not going to create jobs.
No, that was the macro advisors' estimate. It's an estimate. It may not be right, of what this incremental Fed policy by lowering interest rates ought to do for jobs.
And do you agree with that?
It seems in the right ballpark. Okay. If they had come up with a number 250, I'd agreed with that too. There's no great precision here.
Well, part of, I was talking to some of the traders yesterday and those running the hedge funds, and they were saying, look, part of the reason why you're seeing the sell-off is there's also this view now that the Fed really doesn't have many more tools in their toolbox. Right. But there is still QE3, is there not? There is still that option. What could that be, Alan?
Yeah, well, there is QE3. I would like to see, if there is going to be a QE3, I'd like to see them concentrate on private sector assets. I was glad that they threw in the MBS as a kind of extra kicker yesterday. That was a surprise to me and to a lot of people, but to me, a happy surprise. I think this quantitative easing does more good when you concentrate on the somewhat less liquid private assets than on the super liquid treasuries, which was QE2.
Right.
The truth is, when interest rates are zero, there's not a lot of difference between a T-bill and cash. So what happens on the T-bill end, you'll notice when they did this twist, T-bills were left out. What happens on the T-bill end is almost irrelevant now because of zero interest rates.
Well, it's interesting you mentioned that, because Roger Altman this morning was saying what he is seeing in interest rates, and particularly on the longer end of the yield curve, is that he's seeing that it's indicating a recession here in this economy. Is that what you're seeing too?
I think it's indicating a probability of recession. Very low bond yields like this reflect several things. One is the Fed, one is the inflation outlook, but a third is the state of the economy. And it's looking for a weak economy. That's why I said in answer to your first question, how could this have been news to the markets that the economy is weak?
Well, in his view, the rates, he said, were incomprehensible. The rates that we're seeing right now. 10-year yields below 2%, even before Operation Twist.
Sure.
And you agree with that?
Yeah, half. If you went back to the perspective a year or two ago and you asked me or Roger Altman or anybody, are we going to see yields this low? We'd have said no. It seems extremely implausible.
Okay.
But it's understandable in the sense that the Fed has simply flooded and continues to flood the system with liquidity in a, I don't want to call it a last-ditch effort, but in an effort to breathe some life into the economy that's not showing much life.
Alan, before I let you go, I got to put you on the spot. Bottom line, you think QE3 will be launched? What will trigger it? You think it will be?
I do think QE3 will be launched. It won't be next month, I don't believe, although things are happening faster than I thought a few months ago. And I think what will trigger it is the continued moribund economy. Just unless and until we get some substantial fiscal stimulus, which looks unlikely, and or we fix the housing problem, which doesn't look very likely either, this economy is going to be drifting as it is, and the Fed's going to be prone to act again.
Even more stimulus. All right, Alan, thank you very much. Really appreciate you stopping by.
Glad to be here.
Alan Blinder, the former Fed Vice Chairman. He knows a lot about what's going on.